Another topic that's come up for a while is profit reconciliations. So definitely something you just make sure you know the formatting of, and you can go from budgeting to actual profit or actual to budgeting profit. But key thing is why they're different. Now, in this particular scenario, you've been given the budgeted profit, but you might have to work it out, and that would just be work out the CPU, so the contribution per unit, so selling price take away variable cost. So you might have to add up all the variable costs. So in this instance, it would probably be material and labour, and then multiply it with the budgeted amount of units. That would be budgeted total contribution. Take away the fixed cost, that will give you budgeted profit. In these scenarios in A level, the fixed cost will be the same at budget and actual because fixed overhead variances are not accessible. So that'll be a later subject if you carry on your studies. So in this instance, I've gone with budgeted profits. Everything that has made budget profit higher or lower, and so therefore we go through each of the variances. So they've given you the variances. Now obviously if they wanted to make this a more involved question, they could get you to calculate them. But if we look at it, sales price variance, apologies about my scrawls when I wrote it on a whiteboard, but the sales price variance was favourable, and so therefore we would add that because actual profit will be higher if a variance was favourable. Material price is adverse, so we've spent more material than we thought, so therefore that will make profit lower, so we'll take that away. Make sure you clearly indicate if you're adding or taking anything away. You can't get any own figure marks if you just put a list of numbers. So favourable and adverse. When it comes to material usage was favourable, so we've used less material than we thought, so we'll add that to profit. You might have been given the total variance, so the total variance in this instance would have been 600 favourable, but if it's individual, that's cool as well. So labour rate is 1200 favourable, so we'll add that. Labour efficiency is 3000 adverse, so we'll take that away. So a lot of that is quite straightforward. You're only going to get a couple marks. The last bit really is the bit that you might not know. So sales volume variance. So the sales volume variance is calculated by the difference between budgeted and actual units multiplied by CPU. That's not included here because the sales volume variance takes into account the change in units sold, and you're going from budgeted to actual, and they're both different unit levels. So what you're actually going to do instead, because you're saying why is profit higher or lower, well, you're going to reflect that by saying, well, if we sold more units, we sold less units, how much additional or less, how much did we lose, in contribution because of that? So if we looked at this particular question, I've worked out the CPU because they've told you the budgeted contribution, so you could just divide that by the amount of units, or you could do it the slow way I've done here. So to be fair, they gave you the revenue 480 and the variable cost of 280, so not too slow. So £170 contribution per unit, and you can see that we budgeted to sell 800 units, we actually sold 920. So we gained contribution. It's because we sold 120 more units. So we'll do 120 units times that 170 CPU, and so you'll go 20,400. So that 20,400 would be a mark in itself, and then it's just make sure you remember, well, if you sold more, we gain contribution. If you sold less, we've lost contribution. So if we've gained, we'll add it when we get to actual profit. Obviously, that'd be flipped if you did your reconciliation the other way. Then if we've lost contribution, we'll take it away. That then reconciles us to our actual profit, which is 114,400. Now, you might not be told the actual profit. That could be an own figure, and then obviously there's a mark attached to it. But if you're told the actual profit, you know what you're going to get to. That'll be a bit quick and easy, so maybe you won't be told it. But either way, step by step, favourable increases profit, add it. Adverse reduces profit, take it away. Contribution is the other factor, so how much we gained or lost. So profit reconciliations come up, smash them. But equally, if you know the sales and material labour variances, they could be linked to it as well. And then a written question could be around what's caused the profit change. So think about that. It's not too bad. Anyway, paper 2 is good. Good luck.